All right. Hey, welcome back to After Hours. I'm one of your hosts, Jake Taylor, and joining me today, as always, is Toby Carlisle and Bill Brewster. Toby, what's your topic for today?
In the most recent 13F from Berkshire Hathaway, there is a $24 million purchase of the SPY, the S&P 500 ETF. It's utterly baffling, and I want to know what's going on.
If we had one of those cheesy radio show type of things, I'd be hitting a siren right now. Like, woo, woo, woo. Bill, what are you going to talk about?
We're going to talk a little bit about Daily Journal as a potential investment, and we'll touch on me getting dunked on by Charlie.
Oh, my favorite topic. And my segment's going to be also on Daily Journal and some of my notes from it. And also we have a high-quality mailbag, so let's get into it.
Big mailbag.
Right after this.
Tobias Carlisle is the founder and principal of Acquires Funds. For regulatory reasons, he will not discuss any of the Acquires Funds on this podcast. All opinions expressed by podcast participants are solely their own and do not reflect the opinions of Acquires Funds or affiliates. For more information, visit acquiresfunds.com.
Let's get underway. So, first topic off the bat today. Everybody's gone through the latest 13F of Berkshire. They've seen that he's got a big holding in Biogen, which some smart guys got there first. But more importantly, he's also got $24 million, which is like the interest that they earn before lunch on the cash pile. And they've bought SPY, which is the index, the ETF of the S&P 500. What is going on?
No idea. I mean, it's hard to imagine that with that size of the bet that's Buffett, but also it makes no sense as a bet for Todd and Ted with the way that they're compensated, which is any alpha above the SPY. So would you put in your tracker within your portfolio if you were trying to outperform it? Like you're just basically guaranteed to get it. I don't know. That doesn't make any sense to me at this point.
Yeah, I don't know. I don't know how big he would like to go when he's a guy that swings when he swings, but I don't know. Maybe he's doing this as like a little, what do they call them? Easter eggs in the video games, right? Where it's like, this is how things are going to start to go. I mean, he has been asked for a long time about keeping cash in an index. And he has said in the past that might be a really smart strategy. I have wondered why he doesn't have more in an index over the past years. Some of that's resulting, I guess, but at some point, that entity's so big, getting some levered ETF exposure maybe isn't the worst idea for them.
But doesn't that create the problem that the time you've been saving this cash up, waiting for the opportunity to deploy it when the market gets cut in half? How does it help you to have your cash cut in half at the time that the market gets cut in half?
Well, I don't know that that's really what he's doing. I think he's waiting for the elephant. And I guess he had one apparently that was in the sniper sites or whatever last December, 2 Decembers ago.
Tesla probably just got too expensive.
Definitely.
It was probably was that. Tesla. Yeah. Makes sense.
Well, you want to own the utility grid and all the cars, right?
So space and
yeah. Well, yeah, that's right.
The future.
The math checks out there.
Yep, math checks out.
You got to own that stuff to get a market return at this stage.
But maybe the size of the deal that he was working on sort of told him hoarding cash above this number just doesn't make sense. Then buy your own shares. Buy them.
Exactly.
There we go. That's a better idea.
I mean, Berkshire has always, in my mind, been sort of a supercharged S&P 500, bet on America, better capital allocation than average, probably, better patience than
better
average.
Return on invested capital than the average company, and currently available at a cheaper price. So why would you buy a second-rate version of yourself when you can buy your stock back?
Maybe he thinks he's so good a second-rate version of himself is pretty good.
So but he's got access to the first-rate one, and he knows it even better.
That's right.
So
No, I don't know. I don't.
Do you
know
want to
what
hear my
this is.
conspiracy theories?
Yes,
Okay,
please.
so I got two. This is not so much a
Do I need
conspiracy
to
theory.
get the hat, the tinfoil one, or
Tinfoil undies for this one.
I'm already wearing them?
So the first one is not so much a conspiracy theory, but it's just like it's a balancing. They've got some sort of derivative exposure somehow, and they need to have a balancing
Some hedge.
under the new rules. You need to do something like that. I have no idea. That's just my theory. The other theory, now this is real tinfoil
Yes.
hat territory. So I've got Michael Green coming up on the show in a few weeks' time. I'm interviewing him this week. Michael Green says that Buffett knows that. So Michael Green's got this theory that we're transitioning, as we transition to passive sort of taking over the market, there's a tipping point
Just the melt
where,
up.
right, there's a tipping point where the market can't absorb the marginal dollar that goes into it. And what that causes is this exponential ramp and then a crash. And so,
So he's hedged the ramp with a $24 million position.
well, then somebody said this even before even before the 13F had come out. Somebody said, "This is why." Green said, "This is why Buffett advocates for an S&P 500 allocation for everybody who's when after Buffett passes on for his kind of heirs and so on. He says find
Yeah.
the low cost S&P 500." So Green
Astrid
says
money.
because there's
So
going to be this.
Here's what
melt
I
up.
want you to ask Mr. Green. He also has said that there's going to be a liquidity problem. So why would Buffett want to get everybody that he loves into a liquidity trap down the road?
Yeah, that's a good question.
Maybe that question's not as smart as I think it is, but I think it's relatively smart.
I'm sure Munger would tear you apart just like earlier this week or last week.
Later on, we can get into that.
Yeah.
So I
Dramatic foreshadowing.
I tweeted this out because I was kind of interested in what everybody might think about. I was kind of trying to get people to talk about Green's theory. Instead, what everybody said was, because he said Buffett's being disingenuous about his real reasons for putting people into the S&P 500.
You can't do that. You can't say that about Buffett. It cabbages people's minds.
That's exactly what happened. Nobody could.
It's like
Nobody
talking
could think.
about religion.
I even tried to explain to people that that's what I was trying to do, but literally, I would say, don't focus on that part of it. Focus on Green's theory, and their response was, well, he's being disingenuous. He's not being disingenuous because he's Buffett. You're right. It just cabbages people's thinking.
They're incapable of having a rational conversation once you invoke the name.
That's true. It is religious, but and I'm basically there
Munger.
too.
Yeah. I tried to do a very cartoonish version of explaining that problem that Green talked about in my last quarterly letter. And it is a pretty scary thing to imagine what it might look like for if you're not participating in the madness.
Well, are we seeing it now?
We may have been seeing it for the last 5 years. I don't know.
Because when you look
I
at,
don't think things are that nuts yet, guys.
but we'll look at. Okay,
I think
could be right.
I think that there are certain examples of risk-on assets that are nuts.
Microsoft, Shopify,
That I don't think.
I was
exactly.
thinking like
Tesla.
Argentinian bonds and
I'll tell you what I think is going
Greek
on.
treasuries,
Greek trading at
Greek debt.
1% from like
Well,
50%.
trading tighter than US. Ridiculous.
That stuff's nuts.
But that's
I don't
not
think
S&P
that
500.
stuff is nuts. I think that what is going on. This is why I have my pinned tweet right now. That guy Skellicap had his boss once told him, at the top everybody's time horizon extends to infinity. And then he said, unfortunately, he forgot to invert and realized that at the perfect bottom, everybody's time horizon extends to a day.
It's exactly right.
I know, and I think that's what's going on with a lot of these names is people are just like, well, in 10 years, think about what it's going to be. And they
That's
might
true of the liquidity
right.
side, too. Think about that.
That's right, but you got to live through some shit to get through 10 years, and you got to hold it.
I actually think that is the real answer, and I agree with you 100%. But that doesn't. I cannot find the argument that shows why Green is wrong. I just frankly cannot, and so that means that I have to kind of accept that he's probably right. I mean, I've had Corey Hofstein's taken a look and said that it should show up in more illiquid names. I frankly don't can't fully understand Green's point, and so I can't refute it at all, even though I feel that it's wrong, and I think that your explanation, Bill, is the better one.
I like that you think my explanation is better. He strikes me as a
agrees
very
with mine.
smart man.
I'm recording
Oh,
this in my journal.
Yeah.
Bill was right.
So I'm just gonna pat myself on the back real quick. I don't know, but that is what I think is going on. I think with a lot of these assets that the current, this isn't like some genius take of mine, but the current free cash flow yield, in order to buy the equity, you must be saying that it's going to grow for a very long time and the far out duration. And I think that after a long time of people not really remembering what pain feels like in a true economic sense, and I'm, at least in the financial industry, I think people are just so willing to, all the pitches that I hear, like, oh, don't worry about it, just look, 5 to 7 years out, it's going to be really reasonable. And
I think
that's a symptom of where we are more than what people actually believe.
The oddest thing about this boom or this bubble is that I do think that the market has almost got the ranking of the stocks right. Like, it is the very best, fastest growing, biggest, most cash generative, highest margin businesses that are getting all of the attention, which is why if you're like a compounding value guy, you've done exceptionally well, and rightfully so. Like, you figured it out, you're getting paid for it. So it's an incredibly difficult market for a guy like me who's like a deep value guy. And I don't want to make the transition to compound town, particularly not when I think that the train's well and truly left the station. The time to be a compounder was 2009, 2010.
Yeah, well, I'm giving a talk, and part of what I'm going to talk about is, my transition to more of a GARPy mindset, which is really just summarized as, in the past, I really discounted the future. And I think I did that to my detriment. And I think I need to at least be willing to accept that the future is somewhat nothing in the world is knowable. So I don't know why I overweighted the present as much as I did and discounted the future as much as I did, which is really what's going on in my head. But I said in some of my slides, I was like, I think I might be making this transition at exactly the wrong time. I mean, that's the fear, right? But knowing that, you sort of try to put up some barriers around yourself. And
the private's concerned that if the private reverses himself, the gunnery sergeant will only beat him harder. That's Full Metal Jacket. I've misquoted
I just got
roughly right.
That.
Jake, you had that somebody asked about the paper that we were talking about last week, where you said this is the can you explain the paper?
Sure. It was just an observation of what was it like? Well, I don't have my notes in front of me.
I think it was like 10,000 companies over it.
It was a lot of
20
companies
years, 30
over
years.
a decent time period, and it looked at how long was their competitive advantage sustainable, and they used different metrics to kind of identify it, and they picked the best ones in each industry. So it was like adjusted a little bit for each industry's like sort of natural state of order, but the sustainability of being on the top was incredibly low. More than 10 years, it was something like 5%. Right. More than 20, it was down at like 0.5%. Right. And then like wherever the farthest boundary of the study was, it was like
gone into Matrix is swallowing him. The Matrix is swallowing him.
You went just the final point when you were in the Matrix.
Right as he was about to give everybody the pill.
I took the wrong pill.
That's right. Yeah.
Yeah, we all did. Maybe not Bill. Maybe Bill's taking the red pill right now, whatever it is.
I don't know. I hope I'm not taking poison.
So just what was the last point?
The last point that it's incredibly difficult to be on a very, very long term to
over
have
20 years. It was like 0.05% or something, which is like one company or 3 companies or something.
Yeah, no, it was more than that because they studied so many. But it was like, you have a 1 in 200 shot of if a base rate of picking something with a 20 years worth of sustainable competitive advantage.
That just means it earns more than its cost of capital, right?
Well, they had
better than
I don't know the
ROI.
exact methodology. Yeah, better than all their competitors on different metrics. So, the takeaway would be for us, like, all of these valuations are predicated often on 10, sometimes further out cash flows. If you're imagining that you are going to be the smart one that picks 1 in 200 and you're better than everybody else at this game, then kudos to you. I just question if we can all be that good.
Is there a revolution going on though? Is that, how OSAM had that paper saying when the car came out, whatever it was, 26 to 41, there was a period of time where if you look at price to book value, it gets absolutely smashed through that period of time. Value investing doesn't work for those 16 years. Are we now in a 16-year period where the whole economy transitions to that software layer being built out? And if you're on the software layer, then you're making money. And if you're not, then you just... And that was one of the statistics that I saw yesterday. If you exclude, I think, the Facebook, Amazon, Netflix, Google, or FAMG, or one of those acronyms from the market, the earnings are down 7.5% year on year, which is a lot.
Yeah, that is a lot.
Yeah, you could throw that in with the Japan GDP print. That was pretty scary.
Was it 6.3? Down 6.3.
Negative, yeah. And that was like pre-coronavirus, so yikes. What the interesting thing that I've been thinking about, like I'm sure other people have been thinking about it for 4 years, but I'm slow, so bear with me, is the amount of efficiency that is in these bigger organizations. And like a lot of the times when people talk about data, I think it's just total nonsense. But I do think that some of the bigger organizations that have the capability to come in and analyze the data, I wonder if that like moat, for lack of a better term, is just getting wider and wider and wider, because you're not going to be able to enter and compete without some sort of informational edge. And when that's so proprietary and it's so hard to analyze, right? Because a lot of people are like, well, we have so much big data. It doesn't matter if you don't know what to do with it. Mm-hmm. The ability to actually analyze it, I think, is where there's going to be real defensibility. I just sort of wonder if these bigger companies are getting so efficient that it's just very, very difficult to compete with, and combine that with regulatory capture, and you got some nice
tech companies. Like
yeah,
Google.
Is that like the oil is the new information is the new oil kind of idea? And if
I hate that
are they
idea.
Saudi Arabia?
Yeah,
and we're
I don't know. This is where I think like Marcelo P. Lima is correct to advocate on behalf of Facebook, because Facebook is able to get through the data and deliver insights to the small guy that would not otherwise he wouldn't have access to. So if they can sell that data to the small guy, then maybe that guy can actually compete. I don't know exactly where the cutoff is, but I remember Mark Cuban talking recently about, he just said AI is super, super tough, and the big four are really the four that can get there, and you just need a lot of brute strength and a lot of willpower and smarts to be able to analyze vast quantities of data. So it's just something I've thought about, because you look at the persistence of margins, and it's either consolidation, which I think is somewhat overplayed, but there's some truth in that, or there's something that's making these guys just hard to compete with. I don't know.
Doesn't that kind of ignore history though, as far as innovation goes, and like the lack of predictability about it? And it's come from a garage somewhere usually, and not a giant corporation that's supposed to be the one that has all the resources, right?
Yeah, I think it also ignores nature, right? I mean, things grow and then they die. So
it is very hard to see how you compete with something like YouTube, for example.
Yeah.
Or even
that's
Google
the thing
in search.
With the internet, right? The internet trends towards a winner, and sometimes you get a second player that's somewhat close or whatever. But like, think of marketplaces, right? eBay dominated that, and there's no. I mean, Facebook has a shot like that. They have the, that's a big enough audience that they could get it done. But I don't know. A lot of this stuff does appear to be winner take all.
All right. I think that's a good point. What's your topic, Jake?
I thought we'd just do some riffing on the Daily Journal meeting that we went to last week, or when was it? Very recently.
It's probably a good time for me to apologize to the people that last week I told not to ask Munger for life advice. But,
So
but
Bill,
I still do stand by somewhat I said. My tone was not right, and I should probably get some nuance.
What happened?
No, with me at Daily Journal, or generally speaking.
Well, let's start
So
with
let's paint the picture first, though. Bill shows up and he's come from the beach. He's wearing like a hoodie and shorts and flip flops, right? And everyone else is dressed up to come pray at the altar. And Bill, out of the gates, first question of the day is Bill. And so what did you ask him, Bill?
I asked him
short version.
Something along the lines of whether or not value investors should be focused on U.S. companies because many of them are quality. And I gave him too much wiggle room, and I should have just limited it to quality companies, because my theory of the case is becoming that the deep value behavioral bias is going to be arbed away by ETFs and algos. So if you want to survive, quality and having a differentiated view on that part of the business is a good way to do so.
quality can be arbed away too.
Yeah, well, you need you need to have some sort of insight that you're focused on that a computer can't figure out.
But a computer can figure it out. At this point, if whatever factor you're trying to figure out, if it's quality and value, if you think that's the way forward, there's an ETF that does that. If it's momentum and value, there's an ETF that does that. And you think that you're some unique little snowflake identifying these things. You're not. You're subject to the factors like everybody else is. And it's just that your factor at the moment isn't or is either having a good run or a bad run.
Yeah.
And it's
But
not
look
that
at
you're
these
picking the
back
wrong
tests,
stocks.
bro.
Yeah, I mean that's almost like the how you know that it's not going to work is if it's working up to this point. You need to find something that worked really well up until about a decade ago.
Yeah.
So yeah, one of my notes that I had from the meeting was that Munger said that Chinese companies are stronger than the U.S. companies, which I found to be actually kind of a surprising statement myself.
Well, they're backed by the government, so you got that going for you.
Yeah, that's fair, but
I'm not sure. I mean, look, I understand why. I even felt like he dunked on me a little. I've listened to it twice. I'm not sure that he necessarily would have disagreed if I had phrased my question better.
How would you have phrased it better?
I would have excluded the U.S. part because it gave him an out that, like, you just watch so many years of listening to people ask them questions. They find the thing in the question that they can get out of the question in, and they do it. And then it allows them to go into their spiel. Mm-hmm. And I'm disappointed in myself.
Well, counselor, that's why you don't ask a question that you don't already know the answer to. And you were addressing another attorney then too.
Oh my God!
I know, and one that's
of course
very
he was going to duck it.
This art. I know.
Just put the gloves up and lean back on the ropes and just let you have your go. And then he came alive.
It's upsetting.
So another couple quotes. Maybe you guys want to riff on these. If you're uneasy, welcome to the club.
Mm.
I'm very easy.
Moats are disappearing rapidly.
Yeah, that was an interesting one, right?
Moats are? Yeah.
I disagree with that for the reasons that we've just discussed. I just think that's same as it ever was. It's always somebody's castle's falling into the ocean and somebody else is building a new one that's not going to be breached for a decade or 2 decades or a generation.
I was talking with somebody who I would name, but I'm not sure he wants to be have this attributed to him. But he said that moats are in his view. People say moat way too often, and it's really just operational excellence and execution. And I think that's probably right. I mean, there aren't that many businesses that are endowed with winning, the inevitables, so to speak.
Well, that's why Buffett calls them franchises, right? To distinguish them from just wonderful companies. There are some that do have that. Whatever it is, genetic protection, and most of them don't.
Yeah, I think that's right.
Other other takeaways for me: look for a game where you're wise and they're stupid.
That's hard.
That's really, really hard. I don't know which end I'm on these days.
I mean, I think I'm doing that, but that's just not working. So I gotta go back to the drawing board on that one.
Yeah. What's your game, Bill?
I don't know. I try to be patient. I look for certain situations, and I try not to bet frequently. And as I have gotten better at doing this, my turnover has lowered, and I've begun to think more like truly long term. And I am hoping that, the church that I pray to is the right one, because that's what I have bet on.
I also think you do a lot more work than a lot of folks.
I don't know. I mean, I don't look at nearly as many names as most people do. I think I look more deeply.
I think you look deeply. I think you look more deeply. Yeah, that's what I think.
So,
easily.
We'll see. Those guys, the thing that is tough about their strategy is when you wait and you wait and you wait and you wait, then you really got to bet big. And like even Buffett sort of blew his wallet a little bit too quickly in 08, 09. Like it's very, very hard once they get to their size, especially, to deal with the cash drag on the way up and then be like, no, I'm the one that at the bottom is going to deploy everything. And I think I think the opportunity cost of patience in a holding cash portfolio, I'm not sure it makes sense to me. At least for myself. I'm not trying to come at them. They have, I pray to their church. So
the hardest thing about timing is that the market has got more expensive over time. Like however you cut it. So for example, price to sales today, it's the highest price to sales we've ever seen in the market. There's a Bloomberg article by John Authors. He says, the reason is that margins are very high and we haven't had a drawdown for a very long time. But that's been true. So if you use CAPE, whatever you want to use, and you can get data going back to, you can get DJA, that's Dow Jones, like the reconstruction of the Dow Jones Industrial Average, pre the Dow Jones Industrial Average, going back to like 1880 or 1860 or something like that, and you can run it forward using CAPE to see, where would you be invested, where would you not be invested. Basically, and then you can so here's the median, here's one standard deviation, here's two standard deviations. Basically, it's just got wider and wider as you've gone along. So it's been harder and harder to time because it gets more expensive each cycle. Now, I don't know if that's like the same observation that 700 years of
interest rates
going to zero, or if it's just that's a cyclical top. I don't know the answer to any of those things. I'm just telling you what I can see in the data. Like today's the most expensive that it's ever been.
And the down, at least last time around, wasn't down as far as other down times either. Like we came back down to sort of like average, and then went back up from there.
Like a golf ball off a concrete path.
It was
rapid.
It didn't feel that way though. To the youngins listening, it was brutal.
Well, there are a few those two last quarters before it bounced were all like each like down 13%. Like that's almost vertical freefall. It's hard to get invested.
And the caps too, like when you come off of the numbers get big also. Like it's not just the amount of wealth that is repriced is a very, very large number at that point. You know what I mean? One thing that's interesting, you were talking about, Buffett and timing, and I find it interesting where he came into the capital structure on a lot of those deals. Like he came in with preferreds a lot more than
convertible prefs.
Yeah, that was a little bit not quite showing
his hand a little bit. Yeah, I agree.
Yeah, even like a traditional franchise, which I know it's eroded over the last decade, but like Harley Davidson, he didn't even take the equity and he took debt, which, if you're going to bet on a brand, right, he's a traditional brand guy. I could see how he would, or how someone would think he would take the equity, but he just wasn't having it. Which it's a freaking discretionary toy. So in the middle of a depression, are people really going to be buying motorcycles? Probably not, but
space trips for sure.
Oh yeah.
It might be the only place you can go to get away.
Yeah, I'm ready to go to see what's on the dark side of the moon.
To the duration comment earlier, I remember having conversations with people back then who, I didn't need the money when I invested and everything looked good, and now I might actually need the money because I'm losing my job, and what should I do with the money in the market? That is not the time to have that conversation with yourself. Like, that's a good way to lose money for a long period of time.
I was buying nets because I thought if everything goes to zero and we liquidate, at least you get some money back with these guys.
There you go.
And other people were saying you should buy better businesses when it's like this. It's like, you don't know if these businesses are still going to be operating. It felt pretty real at the time. Like, it felt like this could, like, is this going to be a 29 style crash? This is a credit crisis. This is not your average drawdown. The market is going down, but industry is seizing up. Credit is seizing up. Banks are failing. Like, this could be the real thing.
Well, Buffett said it was financial Pearl Harbor. I mean, I don't think he used that term lightly. I think, back then I was into Ron Paul. I think if I had gotten my way, I'd be living in a very different world right now, and I'm not sure I'd like it.
You'd have owned a lot of gold.
That's right, yeah. Well, some big guy that lived on my block would end up owning the gold.
That's right.
But I would have made the right decision.
Any more gold from the DJCO meeting?
He said that a couple of his tricks were, one, to take the high road, and two, you have a moral duty to become more rational.
How do you take the high road? What's that mean?
Well, I think maybe it's
low, we go high. That's what the Obamas would say. Sorry to all the Republicans I just triggered. No, I don't know. This is what I was sort of ranting about last week. Like, it's not genius to tell people to act like good humans. And, like the parenting comment, be a good example. Yeah, no shit. Like, that was my high school. That was our theme, right?
Valedictorian speech.
No, it wasn't even that. Lead by example was what the saying of the high school was. Like, I mean, he's not like some sage in that way. And also, and Charlie, if you're listening, I'm sorry.
Charlie listens.
I'm sure
Bill
he
and Charlie
does.
and Warren all get together to listen.
Dude, they talk about how great we are. They're 3 of the 10. And he has said my kids think that I'm a book with 2 legs. Like, I don't want that to be my legacy for my kids. And
I think you're a cell phone with 2 hands.
Yeah, well, that's right, and that's a real problem. So maybe that's the lesson to take out of that is invert that statement.
You're a Robin Hood account with 2 legs.
No. I'm a Twitter fiend.
Yeah.
Speaking of fiends, my kid got a chocolate milkshake yesterday at Epic Burger. The look on his face, I swear he was he was like cracked out.
That's the first
time.
Like
a chocolate shake. I was like, this is messed up. I'm kind of worried.
It is kind of fun when you give them the first big, like my daughter got her first juice box. I remember that distinctly when she had a birthday party at 3 or something like that. And it was she just stopped and drained it to the bottom. Just like more.
More now. I'm going to piggyback Daily Journal real quick and sort of make this a long segment and co-opt it as my own. I want to believe those guys are going to win, and I love all of them, but you've got Munger up there talking about how he doesn't even know how to use the Google machine, and if you're recruiting talent, they said that there's he goes, I wish that we had I wish we could say we're swimming in talent, but we don't have enough. It's like, yeah, dude, you're running sort of a tech company. The CEO is 80. You don't know how to use Google. I just don't know how that entity attracts talent.
It's cheap.
That's really tough.
Someone some deep value guy gets in there and takes it over and transforms it.
Maybe.
It's got to get cheap first, though.
It's arguably not that expensive. I mean, I was watching, somebody did a Manual of Ideas presentation on it in 2019. It might be on YouTube now. But, I mean, look, the scuttlebutt the guy did was really good. They do have some positive free cash flow. Finally, the revenues are ramping from the subscriptions, and then the other revenues, which is like payment velocity stuff that comes through, they get a skim on that. So good things are starting to happen, but I just
DJCO is software as a service.
You're paying a pretty full price though for that SaaS business. It's tucked in there, right?
It seems like it. I mean, you can't look at the rest of SaaS and be like, oh, well, it's 15 times. I mean, that stuff's growing like a weed. Daily Journal, now, whatever they create is going to be sticky. So that's worth a lot. But the growth.
What do you think about the idea that they're kind of pursuing there of going into places that are hard to get into as its own kind of moat, working with governments specifically?
Yeah, I mean, I like it. I pulled up, there's a contract if you just like Google Cook County Journal Technologies, and I was going through that and just sort of seeing, what the implementation looked like. It's not easy.
Out of there?
It appears very tough. I didn't get the billing structure and all that, which is what I really would have liked.
Yeah.
I'm sure you can find it though, because it's all, I mean, when you're dealing with governments, it's all
RFPs and
yeah.
If
I cared, I would do it. I'm not sure I care.
I have a confession that I bought Daily Journal Co. In about 2000 and maybe it was 8 or 9, not knowing that Charlie Munger was was involved with it,
there
just
you
because
go.
it was cheap.
Yeah,
That's
you got that
interesting.
securities portfolio for less than the price of the stock at that point.
Right. And then I sold it for 100% pop, thinking that was all the money you could make
you
out
were
of
a
it.
genius.
Yeah. Then found
This
out
is-
afterwards, oh, Charlie's in that one. Whoops.
Somewhat related because of the securities portfolio, to the people that think that I dunk on them for GraphTech and Pabri following, watching Buffett sell Wells has not put a great feeling in my stomach.
Mm.
He is rarely wrong on financials.
But Daily Journal's not unloading.
That's true, but Daily Journal is not where the real money is.
Yeah.
Do you guys want to do
They're off a lot. I think they had this is off memory, but directionally it's right. I think they're down from 430 million shares to 360-ish in Wells.
I've got some mailbag questions. We got a big mailbag.
I got a mailbag too, so let's do it.
So the first question was the first topic that we discussed. And that was from Arbitrager92 from the YouTube comments, which we read. That was a good question. This is a mailbag question from the great man Ian Castle.
Hi, Ian.
Not to be a Debbie Downer, but I wonder how many algos are set to short Berkshire the second Buffett passes away and DJCO with Munger. I would expect both those events to turn into ghost towns too. DJCO immediately and Berkshire within 5 years. What do you guys think about that?
Well, people love the community, especially for Berkshire. And I think Bill, do you go to Berkshire? How much of a percentage of why you go is to hear Warren and Charlie, and how much of it is to catch up with friends that you see that one time a year?
0% Warren and Charlie, 3% the video at the beginning, and then the rest to catch up with people that I don't see often.
Okay, so
now a lot of that's because they're on YouTube, right? So I do eventually watch the meeting, but I never go. If I'm ever there, I go to the second story. There's it's like
Don't give it away. Don't give it away because I'm joining you this time around.
My bad.
Everybody, tell
I
everybody.
wait online at 4 a.m. and I just go and I sit down with everybody else. It's the best thing I've ever done.
I hate that feeling like I'm back in a lecture.
Everybody's super polite to each other. No one is really a dick about seats. It's a joy.
So for me, it's probably more 50-50, I would say. I mean, I enjoy hearing them live. There's a different energy than when I watch the videos. And it's not that the message is different. It's the medium and how I absorb it it has more gravity when it's live for me. So it's still 50-50 for me. But I mean, we all still are going to want community, and maybe something else pops up to take its place, but I'm not sure what that would be at this point. And I'm still going to want to go, especially I'll hear these other guys that are behind, like they picked him for a reason. He's not going to pick dummies that aren't going to have interesting things to tell us, right?
I still don't think it's going to be as popular.
No, it won't be as popular. It'll be a true value play at that point again.
I still think Berkshire, the company, does very well for the reason that it's a better collection of businesses than the S&P 500. So it'll be comparable to that, and they've got smarter guys in there, or at least guys who are thinking that way. We don't know exactly what their track record is.
What do you think about this Terry Smith comment about how there's no reason to have it anymore and it should be broken up?
I think people are going to hate when I say this, but I would not mind them selling off some of those businesses and making some sort of calculated decisions on which ones still sort of satisfy the hold forever. I mean,
what do you want them to spin off?
I don't know. I don't know. I don't know everything that's in there, but I do think that there's some stuff that is probably irrationally held on to, and I think that it's fine. And I don't know that it matters all that much. What I don't want is for the insurance company and the utility business to ever depart. I mean, that to me is such a good combination of tax shields and efficient debt. But I don't know. I mean, I think Terry's probably got some point there, and I think Todd and Ted are smart enough to do it in the right way. However, their roles sort of get a, if they leave, then you might have some issues.
I don't think they're leaving, are they?
I hope not.
You don't take the gig in the first place. Maybe you do. Maybe you just think, just sit. I'll be there for 10 years and then I can go and...
I'll buy Spy and I'll...
I'll be the guy who ran Berkshire.
Does the Pope leave the church after he becomes the Pope? I think that's why you went there. Well, I shouldn't say that about the Pope.
They were both all very, very wealthy and successful at the time they took the gig there, right? So it wasn't like they were doing it... One of them was buying the glide lunch with him, right, 2 years in a row.
Yeah. And I think they're good guys. I think they're doing it because they like Berkshire. We'll see how charismatic they are. I mean, that matters, and how forthcoming they are and how willing they are to share their minds. I think that's a big part of Berkshire. But it's like a classic network effect. If we all keep going, it's going to be a sweet-ass event. I mean, the Friday night is awesome. I enjoy Saturday getting rowdy in Omaha. That, I never thought that I would say that in my life, but I like it. The Markel brunch on Sunday is great. It's a great weekend.
Gorat's Sunday night dinner is always my debriefing time. That's my go-to.
Now you're going to have our 10 fans all over you at dinner.
I know. That's okay.
I think the hot tip for anybody going to Gorat's is that Buffett's favorite steak is garbage, and you want to get something that tastes a bit better.
Really?
The T-bone double hash browns.
I don't mind so much about it. Mine was just I grew up in a beef cattle area. I like a good steak, and it's got to have a big char on it, and it's got to be pink on the inside. Otherwise, just throw it away.
Yeah.
I don't care so much about the cut, but just that's what I want.
I used to eat it bleeding, like purple.
Blue rare? You like a blue rare?
I used to. Now I can't. My stomach can't handle it. Anyway, I digress.
What about
I got one about
Daily Journal? Does anybody show up after?
No,
I don't think so. I do love me some LA though. If Kaufman were to take it over, I would sit there and listen to Kaufman speak for as long as he's willing to speak. That guy's awesome.
We'll throw a value after hours live in to replace the DJCO meeting. That's
sweet.
DJCO started out with 10 people showing up to those meetings. I went to the first one when they transitioned away from it used to be Wesco. When there was maybe there were 120 people in a little room. It was pretty small.
Yeah, I mean, we were at one point going into Daily Journal's office,
right.
And I was sitting on some guy's desk in the lobby. He's trying to work, and I'm knocking his stapler over.
Yeah, I think that was 4 years ago. Was the last one in that facility, right?
That got a little cramped.
Yeah, Munger drove his Bentley up. That was dope.
It was cool when it was really small. I had Jason Zweig to the right of me, and somebody else might have been Monish, but right of my left. I was like, oh, this feels pretty good. This feels right.
Yeah.
Zweig's a cool dude. I met him once, and I was like, I really like you. And you can write really well. All right, so this is a question about style drift, if I could summarize it. He said, in honor of Valentine's Day, here's a sincere mailbag question. I've been faithfully and happily married to one woman over 23 years. However, when it comes to my portfolio strategy, I'm the most promiscuous guy you'll ever meet. I fall in love with one strategy and then completely ditch it for the next. I'm smitten with indexing right up until the concentrated temptress bats her eyes and I come running.
Great question.
Why am I such an investing whore?
I thought we just got our first Munger life question.
I know I'm destroying my own gains, chasing returns like skirts. Why can't I settle down and commit the nice strategy next door?
That's a question for you and your own personal God. I think that's a hard one.
I didn't name the person intentionally. I thought it was a pretty funny question.
Is this
and one that we struggle with?
Are you writing your own mailbag questions right now?
I outed myself.
This is submitted from Bill's Journal. I don't know who that guy is.
Yeah. No, I don't know. The answer to the question is really tough. I mean, it's very hard to stick to a strategy when it's not working. And I think that's the essence of investing.
I have managed to do it, but it's creating massive cognitive dissonance. So it's hard. And we're not through the other side yet. So I might give in and convert.
There's always
possible.
There's always something very attractive about that other side, right? That is
the one that's winning,
and it makes sense.
The one that's making money,
winning, right? It's like, of course that's going to be winning. Of course that's an attractive proposition until it isn't.
I find that a few market cycles, right? That's the way to sort yourself out. Just go through a few market cycles, see a few cycles, see what works all the way through the cycle.
Yeah, and what you can stick with. Like the Greenblatt thing of I would never be able to stick with momentum if it went wrong, like just makes so much sense to me. It's got to be the strategy for your style or for your personality.
One of the things that Corey Hofstein said in our interview that I thought was really interesting, he said momentum is not monolithic. Momentum is this moving feast. Sometimes it's low volatility, sometimes it's quality, sometimes it's deep value. And I thought that is really interesting. Like maybe that is why, because if you look at the momentum factor, it is the most robust factor.
It's the one that's always catching the trend.
Whatever's hot chick, it's in it.
It's the Leonardo DiCaprio of strategies.
The thing you have to know though is
Ryan Christensen in high school.
It is the thing that gets taken out to the woodshed and destroyed when the market goes down, and then it doesn't work for a year afterwards. So you have to really know the strategy to do it properly. You can't be the guy who gets into it late cycle.
Then you end up with syphilis. That was a Daily Journal joke
of dysentery. What's the Daily Journal joke?
Oh, Munger just was talking about delaying gratification, and if you can't do that, it's a disadvantage and in the investment world, and also you can end up with syphilis.
It's like I don't know what to say there. Do you guys have any?
I love when Buffett gets pervy too. He says some stuff that's like, oh my god.
I've heard through the rumor mill that he likes to tell a dirty joke, and that doesn't surprise me.
He does.
He tells dirty jokes publicly.
That's right. He loves them.
More than
he's pretty good
at the bottom of the 74, or maybe it was I think it was 74. Somebody said to him, "How do you feel right now?" Because the market was way down. He said, "Like an oversexed guy in a whorehouse," something like that.
That's right. Yeah.
It's pretty aggressive. do you guys have any more insights there? Or I've got one more mailbag question here.
I wish I had a better answer for that. I guess that's just life, right?
Try to stay faithful and learn a little bit more.
Yeah, find someone. That's a good idea. Read the Buffett biographies, see that it works. Read other business biographies. Pound it in. Here's my mailbag cue.
The other thing is like there's just not a right answer. I mean, you can see it in different asset classes. I don't care if it's real estate. I don't care if it's stocks. Like whatever. Different people win different ways. But like, I don't think anyone can win playing other people's games. I just fundamentally don't think it. I mean, I was a reasonably good golfer. I would never do well if I was trying to play the other guy's game.
What about in Bloodsport when Jean-Claude Van Damme adopts a different fighting style of each person who he confronts until he gets through to the end?
So that's a really good point. And what I would say to that is, until I could see him fight Steven Seagal, I'm not sure that I can actually answer the question.
That's a good point. Okay, here's my mailbag question. Seabass D on the side. How did you come up with your definition, sort of following on from our last discussion, but how did you come up with the definition of your personal stock universe? I think you mean strategy. There are several methods in the world to search for stocks, growth, value, momentum. How did you decide where to apply your method?
Well, I saw how well it was working for everyone else in late when value had its absolute heyday, and then you get sucked into it. And then you're too dumb to get off of it, and and here we are. Sorry, that's a little overly pessimistic. I'm joking.
What's the truth for me, at least?
Yeah.
There's a bit of some truth to it, but it just made sense to me, and that in a fundamental, like deep in your bones kind of way, where it's hard to imagine it not being anything other than that. It just made sense to me, and I couldn't, I guess it wasn't smart enough to find something else that made more sense for a different time period.
You got infected.
Again?
You got inoculated. You're the inoculated investor.
Yeah. I guess.
The thing is, I have just never seen anywhere in the world that owning businesses and assets has not been a good strategy over the long term. So then the question becomes, well, how do I want to own those? And I find the world of qualitative research to be a fulfilling one. I enjoy doing it, and the way of thinking about owning a stock like a business is just something that makes a lot of sense to me. So, I don't know, after 3 years of reading and thinking and questioning everything that I know, it was an easy decision.
Bill, do you think that, we've kind of talked about this before in different contexts, but is there anything to be said about picking the kind of companies that you just want to root for to win? Like the people, the cultures. I feel like sometimes with deep value, there's not as much quite to root for there, and you're just like, I'm buying this because it's just stupidly cheap, and I don't even care if it goes out of business, but I just kind of want to get a re-rating on it. Whereas maybe some other investments you could make where you just like, man, I just want these guys to win, like they're doing things the right way.
Yeah, so this question, I will answer it two separate ways. If you're in a hedge fund, I think you owe a duty to your people that are investing with you to do exactly what you told them you would do and earn the highest return. If you are running your personal portfolio and you're going to follow these businesses, I think it's more fun to own things that you are rooting for and that you understand and that you use. Like, I own some Philip Morris. I can tell you owning that is not particularly exciting to me. Like doing, research on cigarette sales is not something I love.
You're not rooting for those guys to succeed?
Not really, no. And honestly, I should probably look into cannabis a lot more because I am rooting for that. I mean, I think it's a better mousetrap for what people need. And I think it's a lot healthier. And there's Swedish Match is a company that some of the dads around here are using Zyn a lot. That's one I might look into. It's like nicotine patches. But that serves a need and delivers a product in a safer way. Like I would not be upset. Like I don't have this I'm not going to touch nicotine thing. But like just my mom smoked her whole life. Like rooting for cigarettes in any way, shape, or form is just like sort of offensive. Yeah. I think it's cheap. So
what about AB InBev in that same model?
Well, I guess I'm more okay justifying beer, but I do think alcohol is one of the most dangerous drugs ever invented. So it's somewhat hard for me to
root for that.
Yeah.
Was alcohol invented?
Well, I don't know how somebody had to, discover it, right? But I think it's impossible to argue to me that people don't destroy their lives in one night when they're too drunk. Like, I mean, the amount of harm that is inflicted on society from alcohol and how ubiquitous and widely accepted it is one of the things that makes my head explode.
It is very interesting that we are so blasé about that.
Yeah, it's basically cocaine. I mean, not really, but like sort of. I mean, like you drink a lot, you do crazy shit, right? And like people are like, it's legal, so whatever. It's like, okay. I mean, I don't know.
Might have to save that for another podcast.
Well, all right.
I don't know, Toby, is there any part of you that wishes
out.
to want to root more for your investments? Or...
For sure. I mean, I love Shopify because I can see that it's a really great business, and I like Toby Lutke.
Yeah,
I've listened to his How I Built This podcast a few times, and I follow him on Twitter. I just think he's a humble, smart dude who's trying to do the right thing and absolutely crushing it while he's doing it. And so I really want him to succeed, but I just can't get there to spend the money on it at the moment. And I kind of think that you get an opportunity at some stage where it's a little bit cheaper. And I think that that's true of a lot of these companies that so Constellation, same thing. Love Mark Leonard. Think that he's doing the right thing there. Still haven't quite figured out whether the buy at 4 or 5 times, get a 30 times multiple in the market is sustainable or not, or whether that gets arbed away. But I'm interested in successful, unusual characters, and I would love to back them. I wish I found those guys a little bit earlier. It's a good argument for like becoming a Ian Castle style microcap investor. Try and find those intelligent fanatics, which love that book, read that book, kind of is having this profound impact on me at the moment. I'm thinking about it a lot, trying to think about, and some of the discussions that we've had about Peter Kaufman, I think that there's something to the way that those guys have arranged their lives that is compelling. And I don't want to say too much at the moment because I want to do a full. I may write a book about it, and I'm going to do some other stuff too. But I think there's some very powerful truths in there.
Kaufman's the man, folks. If you don't know Peter Kaufman, do some research on him. It's hard though. He doesn't seek the spotlight, so it's pretty tough. But
well, true also of Mark Leonard making it hard.
That's true. I guess I'm not familiar with Mark. When you talk to people that know Peter, not one of them says anything bad. That's a hell of a legacy.
The discussions on Mark Leonard, like in the Globe and Mail, are hilarious. They're like, they don't know if he's English or South African. Like that's how well they know him.
Does he have an accent?
I have no idea. I've never heard him talk.
I don't think I have either.
I'm not sure he's not Santa Claus after that picture.
He may be.
Yeah. He is his investors.
We're running out of time, gents. This has been a good one. As much as I'd like to extend it on, we're down to like 3 listeners at this stage of the proceedings.
Thanks for sticking with us.
Yeah.
We'll see you next week.